Personal loans are loans that are often sought after due to their versatility. Funds acquired through personal loans can be used for whatever the borrower needs. Often these funds are used for consolidating debts into one payment, planning for future needs, and an almost endless number of other things. These loans are often unsecured loans, which means their interest rates and other terms and conditions vary from case to case. The biggest factor in the variations is your credit score. The biggest problem is which loans are actually worth looking into. Just like the list of how funds can be used, the list of personal loan lenders is a long one. Now, you have to figure out which one is trustworthy and will help you, not hurt you. This is actually why we are here. We've gathered information of the best personal loans so that you can shorten your time hunting for the perfect loan that fits your needs. Here are the Smart Investor Selects picks for the top personal loans. 1. Marcus by Goldman Sachs. Marcus by Goldman Sachs is available to anyone with a credit score of at least 660. There are several loan options, and each can be used for debt consolidation, home improvement, or Marcus Pay. Marcus Pay is a way to pay down on large purchases over the course of 12 to 18 months. This loan option offers a variety of benefits. These include one-time payment deferment, competitive rates, and soft pull inquiries to prevent credit damage during the application process. On the Marcus website, you can use a helpful personal loan calculator to determine the loan that best fits your needs. Marcus by Goldman Sachs has several different loan options depending on your needs. Debt consolidation, $3,500 to $40,000. Home improvement, $3,500 to $40,000. Marcus Pay, $750 to $10,000. There aren't any fees applied to this loan option, but there are some caveats to Marcus. For starters, this lender isn't available in all 50 states. They also require a fair credit score, so you can't borrow from them if you have bad credit. Along with that, there's a limit to the amount you can borrow too. 2. SoFi. SoFi is a credit company that offers a variety of personal loan options. These options may be used for credit card consolidation, home improvement, family planning, travel, and even for weddings. They don't charge any fees for their services and are a good loan option for anyone with a credit score of at least 680. This company offers competitive rates and allows for joint applications too. Unlike other lenders, SoFi has unemployment protection in the case of falling on hardship. They have competitive rates, only do a soft pull inquiry upon application, and offer an auto pay discount too. SoFi is a fixed rate lending company and has term limits ranging from 2 to 7 years, depending on your loan type. When borrowing from them, SoFi offers you anywhere between $5,000 to $100,000 for your monetary needs. These certainly are great benefits. However, there are some things to keep in mind before you decide to move forward. SoFi has high requirements for their applicants and slow turnaround times on their loans. They require a higher minimum amount, limited usage, and they aren't available in all 50 states either. 3. RocketLoans. RocketLoans is one of the most well-known options among borrowers. The company requires a credit score of at least 640 and requires a minimum income of $24,000. There are 4 total personal loan options when borrowing with RocketLoans: debt consolidation, home improvement, auto, and general. The general loan cannot be used as a student loan or for illegal activity, but aside from those, the possibilities are endless. RocketLoans allows borrowers to use between $2,000 to $35,000. These funds are able to be direct deposited into the borrower's account on the same day the loan is taken out. Along with these personal loan options, RocketLoans offers a business loan too. RocketLoans also offers competitive rates, an easy application process, and an auto discount. These benefits are nice, but like any other lender, it's important to look at the downsides too. For example, RocketLoans has limited terms and doesn't allow joint borrowers. There's an origination fee when you first get started, restrictive uses, and they charge late fees and fees for check processing. 4. Prosper. Known as the first peer-to-peer lending marketplace in the United States, Prosper was founded in 2005. Peer-to-peer lending works in a way that's unique to other corporate institutions. The way it works is that borrowers apply online for a fixed-term loan for anywhere between $2,000 to $40,000. Once 2 peers are matched, Prosper takes care of all loan services for both parties. If your credit score is at least 640 and you like the idea of individuals coming together, this lender may be the best option for you. Prosper accepts a wide range of borrowers, and members are allowed to take out more than one loan at a time. They offer competitive rates and use soft pull inquiries, and they offer a business loan too. While this option may seem utopic, there's a downside to a peer-to-peer system. Relying on someone to back your loan could mean potentially waiting a long time for your loan to get serviced. You may get to a point where nobody funds it at all, which is inconvenient no matter what reason you need the money. Along with this, Prosper isn't available in every state, and they do charge an origination fee for their services. Before you take out a personal loan, be sure you are able to follow these steps. 1. Determine how much you need. Remember, when taking out a loan, you'll need to pay back more. You're going to be paying interest and possibly a fee to get the money. You do not want to pay on funds you don't need, so only take out what is absolutely necessary. Additionally, you will want to know you can afford the payments that come later. There's no reason to put yourself in debt if you can help it. 2. Review your credit score. There are some websites that offer a free credit score report. You can get one a year from the biggest brands such as TransUnion, Experian, Credit Karma, and Equifax. Some student loan sources report your credit score a few times a year as well, such as Sallie Mae. The higher your score, the better APR and loan amount you will receive. If your score is 760 or more, you will have the best options. There are a number of factors that influence a personal loan APRs. One of the factors with the most weight is credit score. If you have a lower credit score, you represent a greater risk to the lender, and this is reflected in the rate. In this chart compiled with LendingTree customer data, you can see that those with a 720 plus credit score pay an average of 7.63%. At the other end of the scale, those with a poor credit rating of less than 560, the rate shoots up to an eye-watering 113%. 3. Find a reliable lender. Credit unions and banks are the best places to go for a personal loan. If they have a banking license and operate under the FDIC, you can be sure they are reliable. You'll want to go to those options first and stay away from payday loans. 4. Check eligibility and get pre-qualified. You can call or visit potential lenders to find out if you are eligible for a loan with them. If you are, you can be pre-approved. It does not mean you will get the funds for sure, but it helps. You will be asked to fill out a form with your information. 5. Review loan details. Finally, go over the details in the loan. You will want to be familiar with the APR, monthly payments, the loan term, and if there are fees or penalties for late payments. Lenders must legally give you this information. When you shouldn't get a personal loan. First of all, if you do not need the funds for a good reason, it is usually not advisable to get a personal loan. It is usually not a good idea to get a personal loan to pay for a vacation or a luxury purchase. It should only be used for important reasons like paying medical expenses or buying a car. If you do not have good credit, it can often be a bad idea to get a personal loan. This is because you already don't have a good record of dealing with credit, and you may end up worsening your score even more. Personal loans are loans that are often sought after due to their versatility. Funds acquired through personal loans can be used for whatever the borrower needs. Often these funds are used for consolidating debts into one payment, planning for future needs, and an almost endless number of other things. These loans are often unsecured loans, which means their interest rates and other terms and conditions vary from case to case. The biggest factor in the variations is your credit score. The biggest problem is which loans are actually worth looking into. Just like the list of how funds can be used, the list of personal loan lenders is a long one. Now, you have to figure out which one is trustworthy and will help you, not hurt you. This is actually why we are here.